Hello, traders. Gary Wagner here. It is 12:09 in Honolulu, 5:09 in New York on Thursday, 26th day of January 2023, and this is the Daily Report for Gold and Silver. For the first time in 6 trading sessions, we have seen gold sell off moderately to strongly. Gold traded to a high last night of $1,949.80. That was before the release of fourth quarter GDP that came out today. Once that report was released, we saw gold trade to a low of $1,918.40 before recovering slightly. Currently, we have the most active February contract at $1,929.70. Because today's decline in gold was based on a robust fourth quarter GDP, it had the opposite effect on silver, which was extremely volatile today, trading to a low of $23.69, but is currently trading higher when compared to yesterday's close by 8 cents, with the most active March contract fixed at $24.02. The dollar was fractionally higher today, higher by 0.17%, so it did provide headwinds that caused gold to decline further and limit the uptick in silver. The dollar index is currently fixed at 101.59. Unquestionably, today's strong GDP report put heavy pressure on gold, causing it to sell off by about $13, and actually was highly supportive of silver, silver having an industrial component. The question on a technical basis that we must ask at this point is, after such a sustained rally that's moved gold from $1,615 to last night's high that was just shy of $1,950, will we see gold correct tomorrow, or a solid inflation report showing a decline continues the move upward? That is what we will focus on today's report. I want to do a couple of things. First, look at a Heikin-Ashi chart to see if it confirms that, and create a model if in fact we do see a correction. This is the same chart converted to a Heikin-Ashi chart. Today's candle is reflected as this pivotal candle with a very small body, but we have seen that before as this market has grown in trend strength as well as declined in trend strength. What we are looking at in terms of the last candle is a red candle, which simply says that when we compare current pricing to the midpoint of today's candle, it is below that. So it is the first potential indicator that we could be witnessing the pivot point or the beginning of a correction. This next chart is back to a standard daily candlestick chart, and I have added a Fibonacci retracement to the chart. I've started at $718, what I'm labeling as the conclusion of the second wave. We are looking at this as a third wave. If it in fact concludes, where would it logically go to? And the first thing that I want to point out is that when we look at the first level, which is the 23.6% Fibonacci retracement, that comes in just below 1900. It also lines up with a 1-to-1 relationship between wave 1. Now realize, wave 3 had to be bigger than wave 1, which is why the 1-to-1 is an area that we knew it would exceed. It came in just shy of a 1.382, and that is an acceptable level for a third wave. So if we do see a correction, my best estimate would be a decline to about $1,900 per ounce. The deeper retracement is a 38.2 at 1861. I could be wrong, but quite frankly, I believe that that would be deeper than we would see based on the rally that began in November. Lastly, I want to present the following model based upon if the third wave has concluded and the correction was shallow. The shallow correction took gold to just about 1900. One of two models used to calculate the fifth wave is either wave 1 equals wave 5 or wave 5 is a 0.618 extension of wave 3, and that is what I'm presenting to you, which would mean we would get a shallow correction to 1900, and then from there a move above 1000 to 2036. This is one of many models. We will have to see if a correction does follow today's sell-off and then a move above 2000. What that would mean, we would conclude our impulse phase, waves 1 through 5, and enter some sort of corrective period. After a correction concludes, with the one rule that that correction could not take gold below 1950, if in fact that's the top, we would re-enter another impulse phase, meaning another 5 count, which would be waves 1, 2, 3, 4, and 5. Most likely, this would be at the end of the year, taking gold to an all-time record high. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekend review. Bye-bye.